So for Europe to recycle this current account surplus, you need a stable risk environment. That is to say, for euro to weaken, you need capital outflows from Europe to be larger than the current account surplus. And when the market is very nervous about potential risk, there is home bias. European investors are not putting money abroad; they're staying at home. That naturally creates a bias for euro to actually strengthen. So, ironically, given the fact that Europe is running a current account surplus, Europe is actually behaving a bit like a funding, a bit like a safe haven currency, if you will.
Wow, interesting.
Okay, is that going to continue then? What's the trade?
Well, our sense is that once this whole Greece drama is over, and I don't know which deadline we need to abide by, but ultimately the policy divergence between the US and Europe is the more prominent driver of the euro. Once the market environment is settled, we expect to see European investors invest much more abroad because they'll be squeezed out of domestic assets, and that will be the reason for euro to weaken.
Well, sorry, just to clarify this, you're saying that the euro is not moving on the Greece. The euro is moving on based on the dollar. And the policy division between the two.
Once we can put Greece behind us, then there's no reason to think. Yes, exactly.
Then we focus back on differentials. I mean, Fed going one way, everybody else, including ECB, going the other way. Does that leave euro at parity by the end of the year or even weaker?
Well, that would be a very aggressive forecast, not one that we share. But, well, we think the extent of euro weakness can possibly be coming down to parity, but not much more beyond that.
Okay, Kate, you're a strategist here. Let's switch things over and talk about the RMB, the Chinese currency, if we could. Given the data...
I wanted to say something on euro, but that's it.
No, okay, go ahead. Sure.
I think,
weigh in.
I think that post-Greece, and we've seen price actions on both sides. We've seen it rally on good news from Greece. We've seen it go down on good news from Greece, which to me just suggests the market, at least in the very near term, doesn't know what's going on with euro dollar. But I think once again we get Greece, behind us, for at least another 6 months or whatever it's going to be, then the full market will get back to focus on the Fed. Okay. And I actually think that we could go back and test the lows we saw early on this year. Whether we hit parity this year, I'm not sure, but I think we're basically 90 cents by the end of next year.
90 cents? Wow, by the end of next year. Okay, can we get back to China now?
We can. Go ahead.
Okay, so the trade numbers in dollar-weighted terms, dollar-denominated terms that I was just talking about. So the trend is still there. It's not great, but it's less bad, I guess you could say, right? But given the route we've had coming to 4 weeks now in Chinese markets, we were talking about reforms and whether this would stall or hold back reforms, right? Part of it, of course, is opening up of the capital account. Part of it is liberalization, further internationalization of the RMB. These guys could do with a softer, weaker RMB right now, couldn't they?
Could not agree.
Are they going to be tempted to go that way?
Could not agree with you anymore, and I'd love to get your take on this, because I've been saying, even though it may sound kind of counterintuitive and there's a negative connotation with devaluation, I mean, I think it should be something that they should consider potentially.
You think they will, Mirza?
I think that boat has sailed. If they were going to weaken the RMB for a competitive reason, they should have done it when the market was strong.
Too late, huh?
If they were to weaken it right now, it would be seen as yet another sign of weakness. It will attract speculative shorts and probably not the most advisable course of action
so it wouldn't work?
to do now.
And
if they did it now, wouldn't work?
It will attract even more selling of the market. It will attract even more weakness as people start to basically pile on to the shorts in China. Now, when the market is weak, is not the time to weaken the RMB. When the market is strong, then you have space to do it, you have scope to do it. But that boat was there a couple of months ago. It's no longer there. So I actually feel that under this environment of market stress, PBOC will brace the dollar peg. They will keep dollar China pegged, essentially, and try to ride out the storm.
Whew, it's going to be a rough ride.
Do you think it's too late? You agree?
Nothing's ever too late, right? But I think he's right in regards to the arguments. I think he's right in regards to the perception that if you devalue, and it's for the reason where they're not getting that smooth transition from being export to internally domestically driven, right? Yeah. Sounds great on paper, but we're seeing that in reality it's taking longer. So I think the probability of them doing that is actually quite low. Yeah. But we may move maybe the band up, actually move the other way.